Selena, tell us what the view is from Beijing at this point, and how does this all square with the comments we're hearing from the U.S.?
Yvonne, that's right. Within the U.S. side, we are hearing these conflicting statements. On the one hand, you have Peter Navarro saying that he doesn't see any reason why those tariffs won't go through. That does conflict from what we've recently heard from the agricultural sector in the U.S., as well as from Wilbur Ross, who were hinting that those tariffs would be delayed. Now, from Beijing, that is certainly the view. Our sources say that they are expecting the tariffs to be delayed, that the two sides are almost in daily contact, that they are making progress and are close to an agreement on what to do about those existing tariffs. So now this is new. Instead of talking about the removal of existing tariffs, they're now talking about cutting the rate of those existing tariffs. Our sources say they could be cut by as much as half. Now, as a reminder, over the course of the trade war, the U.S. has put 25% duties on about $250 billion of Chinese goods. In another round, it was a 15% duty on $110 billion of imports. Now, the next round could be on $160 billion of imports, which would, of course, hit those consumers the hardest. Bloomberg Economics is saying that because this hits the consumers and the U.S. corporate sector the hardest, they expect the U.S. administration to do anything they can to avoid those tariffs in some sort of face-saving way, even if a deal isn't reached.
Okay, what are the, obviously there are sticking points there. What are the sticking points that they potentially can agree on by Sunday?
Well, we've been talking about the disagreement on agricultural imports for quite some time, and we're just days away from December 15th, but our sources say that China is still pushing back against the U.S. demands to stick to a very strict timeline. The U.S. side says that they need this in order to ensure enforcement. China says that it should be based on the markets, and China, of course, is also facing a lot of pressure from its trading partners. It has significantly diverted away from the U.S. when it comes to buying agricultural goods, given all of this trade pressure. Now, the Phase 1 deal is also expected to include some commitments on intellectual property as well as currency manipulation, but this all just really covers the lower hanging, more simplistic parts of the disagreement between the U.S. and China. And again, I want to emphasize that it's been so contentious just for these easier parts, so none of this bodes well for those potential future conversations that could cover thornier issues like China's state subsidies and industrial policy.